You're welcome to the Economy and Politics Show. I'm Ottoabasi Abasiekong. This edition will discuss the 2024 outlook for the Nigerian household. And joining me virtually for this conversation is Dr. Paul Alaje, Chief Economist, SPM Professionals. Happy New Year to you, Doctor.
Compliment of the season, and thank you so very much for having me.
Thank you very much. Let's begin with the state of the economy and how it will affect the budget of households. Inflation is at a represented level of 28% plus, and that's for headline inflation, while food inflation is above 32%, which is a huge concern. The foreign exchange depreciation has put the dollar to over 1,200 naira at the parallel market, while the official NAFEM rate is over 800 naira. What is the pathway for the households as we set into the year?
Well, officially expect dollar to go to official rate to go to 1,200. Our parallel market may even go further. Projection has been made that parallel market may get to 1,500 because when you look at the economic environment, you notice that you are not earning enough in terms of FX. And if you don't earn enough in terms of FX, it will certainly have negative implication on our economy, especially the economy of households. That's one. Two, when you look at the projection by the FOA, it is said that 2024 there will be famine in the land, not just in Nigeria but the entire Africa, as agro produce is expected to grow relatively scarce. That means food inflation is already 32%, or this year, 2024, prices of commodity may go even higher. And that will not be enough. If exchange rate is getting weaker and the food prices is also getting higher, and we are seeing potency in insecurity, especially in the farm areas, then we might say that things might not be as comfortable, as convenient, especially for those who live in rural areas as we may think. There will also be a projection relative urban poor this year. The good news is those who do business in the area of real estate or anything related along real estate may be able to cushion the effect. But you also see that very soon, Nigerian companies will come to the realization that IT may need to play a significant role in making them to become more competitive. As a result, some organizations may look quality staff to their foreign counterparts, especially those within the ICT sector, as they might see a relatively better offer, which is cheaper than what some persons are earning. What it means is that, yes, we've been tightening our belt now for some years back, but 2024, tightening of belt will become the reality. Economics policy, they don't come into full fulfillment until 6 months after, and they may last for a whole period of 18 months. So we've started seeing what happened to economic policy that was enacted or started relatively towards the end of May and effectively towards the beginning of June. That was removal of subsidy and Naira devaluation. We have seen more potency of this, the potency of these policies around November, and that has extended even to December. Do I think all of these effects will disappear by January, February, March? I doubt. Yes, I expect inflation to go down, but according to the available information, inflation to go down. Government is expecting inflation to go to 21%. I also hope that the hope of reduced inflation will be a reality. But as I speak to you, the indicators don't align or agree that those factors will remain. Here is it. When inflation is growing, poverty is growing, and if unemployment is growing, it is a signal. All of these are signaling what economists call stagflation, which is the proper word we use for suffering. What does that mean? Stagflation is when you have inflation and a recession, or you have inflation and you have suffering, or you have inflation and you have unemployment. When you have some horrible parameter and indicators together, then you are going to see a stagnating economy in an inflationary environment. Then you see that household will suffer. So, but this will not be the truth for all households. There are households that will, of course, live in bounds and live in wealth. So this is where employers of labor, because when you look at the relationship between household and firm will always call the household to bring in more people for them in terms of employment. Now, when people come to household in terms of employment, it means that the firm is willing to pay them, but firm has the responsibility of paying for those workers. But when firm is not making enough, one, because NPR is all-time high, and borrowing becomes a discouragement for firm to borrow. What that means is that the labor force and the employment capacity of the industry or household will significantly reduce. Guess what? People will have to go back into facing the household. So, relatively, most economists have agreed a lot of people liberated from poverty, hunger, and deprivation. And we just need to wait for World Bank. If their projection of 5.1 million people that they projected between June 1st to 31st, the last administrations between January 1st to May 31st, 4 million people were, of course, added to poverty bracket.
Okay, Doctor, with the prevailing economic conditions, like you rightly said, and noting that you're an economist, what are the opportunities to boost household income in 2024? You've talked about employer and employee relations, looking at firms and how they can jack up the issue of pay and salary. But beyond that, you've said that there are some households that will benefit from this period. How can households readjust and really create value amidst this challenging era of stagflation, like you rightly put, as several analysts and economic groups have come out? CFG has also brought out something about 18 months of a likely recovery, which you just noted now.
Okay, so here is it. We have to coordinate ourselves first as an economic agent. We have household, we have firm, and we have government. So these three different components must become far more responsible in this time of hardship. I've seen the president's biggest fiscal document called the budget, but this fiscal document, when you look at it, consumption is responsible for nearly 65%, while investment will only be 35%. And government is looking at spending 28.7 trillion naira in the 2024. Now, this 28.7 trillion naira, are we going to spend it from revenue generated, or we're going to spend the money from borrowings? Well, from what we can see as of today, it looks as though borrowing figure may increase. If we increase and we invest in the economy, and which part of the economy are we going to invest? In the real sector, in consumption, or in investment? My advice has remained the same. Government must invest in investment for that expansion and prosperity to happen to industry and by extension to household. Industry must become innovative. Doing business the old way before 2010 or before COVID must be different. It's a time for us to automate our processes. Unfortunately, automation in itself will bring many to poverty, hunger, and deprivation, those who are endangered species. Those who have innovated in terms of household, which I'm going to now, they will also expand as the economy is getting worse. So here is it. Someone who is member of household must ask, do I have new talent? Do I have new skills? What can I change in terms of skill? What can help me earn more and improve in my earning capacity? If it is traditional knowledge or something that is not changed or nothing related to real estate or relative fixed income that can grow with exchange rate volatility as well as grow with inflation, then it's going to be very difficult. Those that do business in some markets, I can tell you that even the market, even though we have seen a lot of expansion in terms of the valuation of capital market, I can tell you remove the value of inflation for it and see whether that market truly expanded the way we have projected it or not. So everybody, we have to get serious. As a nation, we need to get serious. And we don't need to be over serious about ourselves, but become serious about our prospects and about our process. Unfortunately, I'm not seeing most of that happening today. So household, it's a clarion call to say that the way to come out of this is to acquire new skills. And these skills must be deployed in direction of organization, which will, of course, be properly valued and earn more income. The truth is that organization has started because they want to have profit, which economists call pie. Now, this pie will not come without effectively combining factors of production, which includes land, labor, and capital. But for advanced economics, these two could be reduced to interaction between capital and labor. Therefore, labor must become must become human capital. That is healthy labor with quality knowledge and experience to deliver on company promises, which includes one, reducing costs, two, improving revenue. 3, improving the brands of company. 4, helping with improvement in overall performance of organization. I tell you, anybody who can give the 4 to any organization, I think I'll be the first person to hire.
So thank you for that tip. The households have to hone their talents, manage it very well. And of course, the companies have to come up with that 4-point strategy. Government must look at investment. We've harped on this issue of investment for government. But look at expenditure. How will households be affected in this area? Purchasing power has declined. I mean, foreign exchange depreciation and inflation has really crept in. Food, transport, housing, and yes, food, transport, housing, and even cost of fuel are really part of the things that take out of our purchasing power. So how, in 1 minute, how can we navigate this
More people will be thrown into poverty. That's the obvious part. And I'm not the only one saying it. World Bank had reported it. IMF had reported it in 2023. And this is how it will happen. Ordinarily, your rent should not be more than your 2-month salary, or at best 3-month salary, to show your capacity to earn. So if you can't, then you can pair with someone. And I hope that is your partner or your wife or husband you are partnering with together. But if it is your neighbor and you have opposite sex, then the conversation is beyond this interview. So to focus on the interview properly, here is it. If your income will suddenly not be enough, not because your company hates you, but because the policies have been made that now make the capacity of the money or purchasing power, as we call it in economics, that has reduced purchasing power. What you must therefore do as household is perhaps to expand on what you earn. Recall that transport is taking almost 30 to 60% of income. So if transport is taking 40 to 60% and rent is now taking between 30 to 40%, then you have to borrow to live. Now it's going to give you money if you are going to borrow without showing them where someone's great-grandfather's grave is, especially borrowing from the commercial bank. It's going to be a tough time, but I can tell you it's also going to be a prosperous time for those who are willing to weather the storm, those who are willing to grow beyond the norms, those who are willing to show forth with their talent and skills and to get to the other side. It's often said that the end of a tunnel is light. I hope that that day, when we say there is light, the workers of electricity will not take their light. So that at the end of the tunnel, it could also be darkness.
Let me take you 1 more minute as we begin to wrap up, Dr. Paul Alaje. For policies now, we need policies, fiscal policy perspective that would help in driving inclusive economic growth. So I want to ask you these categorical quick questions. It could help us in a minute. Palliatives, for example, this government gave 50% form of palliatives to some transport routes across the country. Some people are saying they should extend it. Should it be extended? Subsidy for electricity, should it be upheld for this year, considering the pressure of the fuel, the PMS subsidy has been removed, and of course, the foreign exchange subsidy has been removed? How should fiscal policy come in these challenging times?
The removal of fuel subsidy has largely affected household. Now, if governments don't continue to give support in terms of electricity bill, then it's also going to affect firm. What will happen is that cost of production will grow sporadically. If business and firms could not cope, guess the first decision is to retrench people. When they retrench people, they are going back to the household, unfortunately. So household will always be at the receiving end of economic blows. That said, when you look at palliative that government has given, the first thing we have seen is that state governors have shared rice. I'm still trying to see if the rice shared last year or towards the third quarter of last year thereabout, if the rice has not finished. But for so many it has. I also noticed that government shared rice during the just concluded Christmas. And I can tell you, in less than 1, 2, 3, 4 months, those will be nowhere to be found. Government is planning to spend about 75 billion, as injection in palliative to this economy. Big amount, but for bigger inflation. 200 million people plus, or 250 million people, 220 million people for an economy of over $400 billion. How do you spend 75 billion naira and expect to have impact? The impact will be almost not in existence. Therefore, palliative and support is important for our people, but it's on what? My advice is that government should put palliative on CNG, such that vehicles are available for people. Government should put palliatives on electricity, support people in terms of purchases of PMS, especially by making sure that refineries that we have announced in 2012 that will be ready is eventually ready and available to produce in Nigeria. As against what some economists have said, that when you have this refinery, it's not going to have any impact at all. That is not correct. It will certainly have impact. One, availability, because this is what the market uses against the demand side. When the market understands that demand has no option, whether it is available or, once it's not available, the market can bring any price. But when we know that it's available in consumable quantity and there is room for competition, at that time, you are going to see what is the true market rate. You have seen what is happening in sugar. You have seen what is happening with cement. When one company wants to muzzle the industry, another company said, no, we will maintain the current price, the status quo. And I hope that this is what we see in the case of refinery. Because if we live in the hand of one refinery, we're as good as running a monopolistic market. And in a monopoly, you and I know the implication. It may not all go well for the country and the people.
Thank you very much, Dr. Paul Alaje, for this very interesting conversation. We would have had more to discuss, but we know that time, of course, we'll have more time to have this conversation in the course of the year. But yes, thank you for your fresh insights on how the outlook for 2024 for households would look like. Thank you once again. Dr. Paul Alaje, Chief Economist, SPM Professionals. Thank you. To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow our social media platforms to engage further on this show. Till we come your way again, enrich yourself with the knowledge of socioeconomic developments around you, because it's the wise thing to do. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.